Last month, I made $27,517 trading this exact strategy. And you know how many hours I spent in front of my computer? Just 22. That's less than an hour a day. And here's the crazy part. I only took 19 trades the whole month. While everybody else is glued to their screens with 15 indicators, hunting for the next big ass move, I'm using the most boring strategy imaginable. One setup, same time every day, in and out in minutes, and done before most traders even finish their morning coffee. In this video, I'm gonna show you the exact 3-step process, why I actually celebrate when I lose 60% of my trades, and how you can start this with as little as $500. And no, this doesn't require any complex analysis, news watching, or indicator madness. Fair warning though, this strategy is so boring that most of you won't even finish watching this video. But for those who do, you'll have access to a strategy that's made both me and all of my students over $5 million over the last 4 years. 6 years ago, I was the guy with 12 monitors, 47 indicators, and bags under my eyes from watching the charts 14 hours a day. And now I make more in a month what I used to make in a year from doing practically no work. Let's just say at first I wasn't only looking at NQ, good old NASDAQ, doing my little scalps or my swings. No, I was looking at a ton of different pairs. Let me go and show you one of my old watch lists. If I just go over here, you'll see I used to look at all of these pairs and all of these pairs, and there used to be even more. I actually removed quite a few of these. So I'm sure you guys can imagine how much shit I was looking at constantly when I was placing these trades. Instead of just looking at 1 or 2 pairs, I was looking at 20, 30, 40. And instead of just placing a trade before I placed the trade, I would be looking at 1, 2, 3, 4, 5 indicators, a bunch of different trend lines, a bunch of different support resistance zones. Maybe, you know, this pair is saying something different. Maybe I can get more out of this pair. I was overcomplicating literally everything. And let's just say I lost a lot of money trying to chase exciting trades. I mean, especially in the world of crypto, there are quite a lot of opportunities, all right? I mean, if you just look at Bitcoin on the weekly, you'll just see how much this thing goes up and down every single day, week, month, and year, especially cycle. But the problem is there's always going to be missed opportunity. If you were to look at, let's say, a pair like Curve, you're gonna be able to see that there's going to be massive volatility at times, right? You're gonna see these massive moves of almost 20x, and then you're gonna see this thing go down over multiple years, 97%. The thing is, if you zoom in, you will see these little opportunities where you can catch these pumps. And so especially with crypto, it's going to be something that a lot of people are always trying to chase. They see a big move, they think, you know, they're a little bit late, but not too late. We're still early, right, boys? And yeah, just trying to chase all sorts of pumps. And whenever you try to chase something, maybe you're thinking, oh my God, we just finally broke above this high over here. We're just gonna retest and go higher. But instead of, you know, getting in over here with a decent stop loss and a decent take profit, your stop loss, just like mine right here, which I love how TradingView does this, it's literally in the minus. It's a below zero. Motherfuckers don't care. And then of course you hold this bitch forever and you're finally break even, but you know, and you're kind of starting to freak out like, dude, what the fuck? Like, I've been holding this for 69 years and I haven't made any money. So yeah, I mean, let's just say I wasn't holding it forever. I would probably take a fat loss down here thinking, you know what, GG's, we lost support. I held this thing too long. And I would lose thousands of dollars per trade. And I would take a lot of trades, like I said earlier. The problem is I wasn't even having fun. I was literally just gambling, all right? I was just getting dopamine rushes. I was thinking maybe I was gonna become a better trader in the future if I watched more videos, took more trades. Maybe I'm gonna get lucky. It's more like a gambler's mindset. And yeah, the worst thing is I just wasn't really making any amount of money and I was stressing myself out and confusing myself by looking at way too many things at the same time. Now, there was a moment where I kind of realized I need to simplify, right? Because if I were to look at this pair, let's say on, let's say I'm gonna go into this pair, right? Or maybe not. Let's go to this pair right here. Great example, guys, great example. See how much shit there is on my chart? That's the exact pair I used to use for this. So actually fantastic example going all the way back to 2022. So what I used to do is I would look at a million different things, right? Let's say we were down here. I was thinking, all right, cool. We had a really big move up. Now we're pulling back. I'm going to look at seasonal tendency to see how well Bitcoin is going to do overall, right? In, you know, let's say March and April. I'm going to be looking at seasonal tendency to see whether we're going to be potentially going up or going down. Then I would be looking at a bunch of other things too. I'd be looking also at USDT dominance to see how it's doing, Bitcoin dominance. I'd be looking at total 1, total 2, total 3, others dominance, you know, XRP dominance, Ethereum dominance, Sol dominance. I'd be looking at all these different things. Curve USD, but also Curve Bitcoin, Curve Ethereum. You guys get the point. So many things. And that would be just to start off. Then I would also be grabbing a fib either from here or from here to try to figure out exactly where we're going to be pulling down to. Then I'd be looking at some sort of, support resistance zone, something along these lines. Then I'd be trying to find the absolute best fair value gap there is. So maybe I would find myself on the monthly drawing this thing out over here. And then I'd be thinking, all right, cool. It seems like we're in a pretty good position here to start to long. Oh, but hold on, I forgot about the VPVR. Hold on really quickly. Let me just pull this up real quick. Right, I don't know, fucking here. Oh, well, if I look at this thing, in this case, it's probably not gonna let me because it's the wrong chart, I think. Yeah, it doesn't let me. You guys get the point though. Basically, it's on bar replay. Let me go ahead and remove that. I would basically be looking at this thing and trying to figure out the exact best zone possible in this case. I notice the value area low would be all the way down here, or maybe I would even pull this a little bit differently. I could maybe pull this like so from the recent price action. And then I would be trying to find something else. I would maybe be looking at also good old RSI right here. And I'd be trying to find some sort of divergence or something that's telling me that we're gonna hold. So maybe I would pull out a fucking trend line over here, be like, look, we kind of have a trend line over here, something along these lines. And look at this, We also have this trend line also over here. Isn't that phenomenal? Look at that, boom, boom, boom. We're holding it over here, amazing, this is looking great. Let's go on daily, let's find ourselves a little divergence real quick, because that's gonna help. And of course, we'd be looking down here, we saw a lower low, over here we saw a higher low. So I'd be looking at all these things, and then probably I'd start to scale into longs over here. And let me start to remove all of this shit, because it really is just a lot of shit. I'm gonna go and keep that actually. That's the one thing I'll keep. Boom, boom, boom. So I'd find myself my long entry, find myself my little stop loss, and then maybe I'd take my profits over here for 4 hour, or maybe I'd be looking at some of these extensions, or maybe I'd just be looking at support resistance. So in this case, if I look at this, and I were to go to this, and I were to go to this. Oh, there we go. Interesting, they changed that. Then I'd be able to see that we did have support flipped into resistance multiple times, so I could potentially take some profits a bit earlier. And just like that, I'd have myself a trade, which I would hold for 140 days and make what I can now make in like 5 minutes. So obviously there's a difference between swing trading and scalping, but let's just say this is very inefficient. The day that I realized I didn't need to do all this is the day I realized that all I had to do was use 2 or 3, maybe at the most, concepts to be able to find these trades. And if I were to use curve as an example over here, it could literally be as simple as grabbing an accurate fib, which would be like this, looking below the 0.5, finding, let's say, a fair value gap right here, and then us literally just holding it, breaking above, retesting. And then over here, you could just zoom in into the daily as we're retesting this thing. And then as soon as we close outside of it, which could be right here, then I could just set my stops here, and then my take profit at some easy liquidity. And just like that, I would get a 3-hour play in less time. Still, it takes quite a good amount of time, but less time and less concepts. And I only had to look at one pair. It was significantly easier, and I didn't have to pull out a million trend lines and a million different indicators. But then again, I would still have lots of issues. I would see lots of profit, and then maybe I'd set my stop loss break even. And what would have happened in this case? Well, stop loss break even, boom, and then it would have hit take profit, and I would have lost my fucking mind. So I still had lots of problems, even after I decided to actually simplify, which is why in the end, I just opted to change markets, to move into prop firms, and to start to trade NASDAQ more in the lower time frames, because you would get similar opportunities, just way faster, way better, and there's a lot more things that you could utilize to actually find these amazing setups. Now, once again, my strategy is not the same as it used to be. It has changed a decent amount, which I'll be showing you guys that in a moment. But I just want you guys to understand that reducing complexity, in other words, making things simpler, dumbing things down, helped me increase my profits significantly. If I could get 3R over like 3 to 4 months, but in this case, I can do it in 3 to 4 minutes or even 3 to 4 hours, it is a big difference, right? It is significant. And if you're able to get more trades, high quality trades, and you have much better numbers, it's gonna be a lot easier for you to get, quality trades and quality profits. The other main reason why I also switched from swing trading crypto, especially during cycles, to more or less day trading or scalping NQ and NASDAQ is because it's very hard to objectively backtest something like, let's say, Curve, which is an altcoin, on something like FX Replay, which doesn't even have that coin, on the weekly, where there's only so much data. And especially, and remember this, when you analyze these charts, these pairs every single day, you know their weekly charts by heart. All right, I know the weekly chart of NASDAQ very well, which is why I don't swing trade NASDAQ, because as soon as I were to go into FX Replay and look at the past, I would know exactly what's going to happen next, so there's no point. right? But if I go into a lower time frame, to a time where I don't remember as well, maybe a year ago, 2 years ago, 3 years ago, or a certain time where I wasn't trading, etc., then I'll actually be able to trade price action and back test it in a way that I've not done before, right? Something that I have no idea what's gonna happen next, which will actually help me be productive in my backtest. Look guys, I mean, there's different reasons why people lose money, but the main reason why traders lose money, it's not necessarily a strategy, they're just addicted to losing. Let me explain. Let me just show you guys the difference between exciting trading and boring trading. Exciting trading would be going down to the 1 minute or even the 15-second time frame. God knows how crazy you'd have to be to go down to such low time frames, but I digress. You would be looking at any single opportunity. So you'd be going straight to market open, and then you would basically just be zooming way the fuck in, trying to figure out anything that could actually work for you. So you'd be trying to draw out maybe a little bit of support here. You'd be trying to find any fair value gaps. You'd be drawing in any little levels. And then as soon as you have a little move over here, you'd be like, oh my God, I gotta take a trade. We just took out this liquidity and we're holding the support. I'm gonna go ahead and long this. But wait, that doesn't make sense because we took the liquidity, but we're also holding this. We didn't take the liquidity out here. So hold on, I'm not gonna take a trade. I gotta wait for this, you know? Oh wait, but we did take the liquidity. So what do I do now? Oh shit. Well, I guess I'm just confused. So maybe I'm gonna open up a hedge position. I'm gonna buy and I'm gonna sell at the same time. You know, oh fuck it, I'm just gonna do that. All right, let's do it. Let's do it, guys. All right, come on, this is gonna work. This is gonna work. Let's go. I'm gonna go just 1-to-1. Nice and easy. The math literally doesn't even add up if you do that, which I find really funny. Oh, all right, cool, guys. Let's see what happens. All right, cool. I'm in. Let's go. Oh my God, bro. Oh no. No, bro. I lost both trades. There's no way, bro. In this case, maybe you did make some profits if you actually did manage to get into this, but realistically, you wouldn't have actually gotten in, and also slippage and spread would have fucked you. Oh, well, okay, dude, whatever, it's fine. Maybe I missed it, maybe I got a win, maybe you got a loss. In this case, maybe you made 0.5R, fuck it. Dude, I made some money, let's go, I'm hyped. All right, bro, this thing's breaking down. Let me short this thing to fucking 0. You know what, I'm gonna set my stop loss here. It's not gonna be able to go back up here. Dude, I need to set a big take profit. This is gonna be a big move. This is gonna be the trade that makes my fucking career. Let's go, boys, let's go. Come on, bro. Oh my God, bro, I just lost all the profits, dude. Oh my God, dude, what do I do? You know what, it's breaking down again. It's fine. You know what? I don't care, I'm setting a big stop loss this time, same target. And now you're doing a 0.5R trade. Come on, let's go. Oh, big win, boys, let's go. I'm only down 0.5R for the day. Like, what are you doing, bro? If you're backtesting like this, then you're a psychopath. There's no way that you're actually trading live markets like this and actually follow a decent plan. So I hope you guys get the general plan and the general gist, I should say, of exciting trading. It's not real trading, it's basically just gambling, all right? And it's kind of fun, but it's not real, okay? And builds really bad habits. Now, on the contrary, boring trading would look like this, okay? You're looking at the markets, waiting for market open. Obviously, it totally depends on your edge and the way that you go about things. All right, 1 candle, 2 candles, 3 candles. All right, so that's my opening range. Let me go ahead and sort this out just like that. Cool. So that's my opening range over here. We got 1, 2, 3. Oh, in this case, we got a little close below. I'm gonna go ahead and grab my FIP to get my 0.5 real quick. All right, that's my 0.5. I'm gonna set it over here, that's discretionary. And then I'm gonna do a nice little 2R flat roll here real quick. We almost got this to these lows and the minus 0.5. In this case, you know, I definitely don't want to get reversed on, so based off my data, I'm just going to make sure that I have it set to a clear low, the 1.8R, and let's go ahead and just let this play out. Okay, we got stopped out today. Let me go ahead and review this trade really quickly, add it to my journal. All right, so in this case, it just kind of seems like we went down into discount, had a little move up, and that's about it. All right, cool, I'm done for the day. That shit's boring as fuck. You took a loss, but that's it. You didn't freak out, you didn't do anything else. The end, right? Now, in this case, with the strategy which I like to employ, you would not have actually taken a trade, all right? Because in this case, if I just zoom out, you'd be above this EMA, which means that you're not actually going to be taking a trade. So that's also where backtesting and data optimization comes in, because instead of minus 1R, you would have had 0R, which basically is more money in your pocket. So that is the main difference between boring trading and exciting trading. I hope you guys understood that. And I could have gone way crazier on the exciting example, because I've done some crazy shit. Now, some of you might be thinking, Seb, explain to me why? Why do I keep choosing, or why do these people keep choosing exciting trading over boring trading if they're losing money? It doesn't even make any sense. Well, it kind of does. I mean, if you were to study the human brain and human nature, then you will understand exactly why people actually do this. Now, it's not like I'm a fucking scientist or a specialist in this field, but what I can tell you guys is it really is as simple as You look at the charts, you see price moving quickly, you're thinking, holy shit, if I just get in, if I just click buy or click sell, I can make money right now with this price moving, right? You see infinite opportunity right in front of you. And even more so when the markets are moving very heavily, like you just saw the markets rip and rip and rip and rip, you're thinking, dude, if we just have one more 5-minute candle going up, if I just full port my account, I'm gonna be able to double it real quick, right? It makes no sense, but it's just neuron activation, as opposed to boring trading where, you know, I should be waiting for us to actually go down into a discount, right? I need to wait for a clear swing high to form. I need to wait for us to actually go down into discount. I need to wait for us to take out these liquidity zones right here. And then I'll go down into the 1 minute and then I'll look for a play, for example, right? That shit's boring, dog. Like, you don't do anything right now. You just wait, you're patient. Maybe it goes down there and you get a trade, maybe not. I mean, dude, that sounds hella boring if you ask me. You're not making money right now. So obviously that's the reason why people choose exciting trading over every time, because it's just more exciting, because you feel like you're gonna make more money more quickly, you're gonna be able to get out the hood. But trust me, you're gonna just be staying in the hood for much longer and you're gonna get clowned the fuck out because you can't even follow basic discipline in a basic plan. If you want profits over entertainment, just type boring, just so that I know that we're on the same page, because a lot of people will still choose to do exciting trading. Maybe you're watching this video and tomorrow you'll just say, fuck it, I'll still break all my rules and do all this bullshit, as opposed to making a clear plan and following it. If that's the case, then don't type boring, because I mean, dude, get out, I'm sorry. But if you need help, obviously hit me up in DMs. I mean, but if you don't even care, then why are you watching this, bro? So what exactly is this strategy that's banking me $27,000 a month? It's literally just 3 steps that I repeat every single day. I call this the SCT market maker strategy because we're basically market makers at this point. I'm kidding guys. I just couldn't get a better name. All right guys, let me go over this. Now let me emphasize and start off by saying that I don't just have one strategy, and I have quite a few different things that I look at. So obviously I do keep things simple, but with my back test, I've optimized a whole bunch of different things. So I'm gonna go ahead and just show you some simple aspects of 2 strategies which I like to actually look at and trade. What I'm going to do really quickly is just find you guys a winning example, just so that it's a little bit easier for you guys to visualize this. First things first, I go to the New York Open. I wait for the first 15 minutes to pass, the first 3 5-minute candles, and that gives me my opening range. All right, 1, 2, 3. Opening range just means it's a range right around the open of the session. So in this case, that's the range of the first 15 minutes of the New York session being open, which is 9:30 to 9:45 a.m. or 2 hours earlier because I'm in a different time zone. Okay. Now, if you're going to be doing a opening range breakout strategy, you're basically just going to be getting in once we break out or break down from the actual range. In this case, what I'm going to be doing is showing you guys exactly what this looks like. Right here at 7:45, we get a candle closure above our range. So this would be your entry. As soon as we slap above that range, get a candle closure. Your stop loss would be at the 0.5 or the nearest swing low. In this case, very small difference, and it's definitely worth setting it at that little low. Then your take profit would just be set for a nice little flat 2R, just like that. Take profit hit. Did this take 4 minutes? No, this took like 6 hours, 20 minutes. Did you have to stare at the charts the whole time? No. This took you maybe 2 minutes of screen time, and that's it, you're literally done. All you have to do is just hop on as soon as the 15-minute range is over. As soon as that's been created, then you just go ahead and wait for a close above. As soon as that happens, you just enter, stop loss, take profit, walk away. Nice and easy. There's a couple of other things that I do like to look at too. I have 2 EMAs. If we're above both of them, then you're good for longs. If you are below both of them, then you are good for shorts. As simple as that. So that is the basic opening range strategy, which I have, which nets me between 5 to 10 hours per month with a 60% win rate. Sometimes it goes down to 40% depending on market conditions. And I mean, with that, you're able to get plenty of trades and plenty of profits on funded accounts. Let's say you make only 5 hours per month on a 200K account. That's very easily going to be 10K per month. Now, that's one strategy which I trade. There's also another strategy, which in this case is going to be a little bit different. Now, I'm going to go ahead and find a little example for you guys so you're able to see exactly what this looks like in real time. So I'm going to go ahead and get that for you guys right now. First things first is I'm going to be trading the New York session as well, but I'm not going to be trading the New York Open necessarily. So I'm looking at New York Open over here, waiting for some volatility to kick in. I'm setting up my liquidity zones. So in this case, I'm going to be adding in London highs and lows. So these are the sessions highs and lows. Then over here, in this case, it doesn't matter because we already took this out. So then you'd just be adding this over here to Asia. And then you'd be also adding this liquidity zone right here, which is the new weekly opening gap top, which is going to be pretty important because I think that's going to be the weekly open, which you can always just check with this, right, in this case. So over here, we take out this first liquidity zone, which does give you a little play. I would be going into the 1 minute to actually take this trade, but I'm not always going to be taking a setup like this first one, just because we have other liquidity zones right above, right? But in this case, if I wanted to, I'd be waiting for a rejection. Then I would look for the nearest bullish fair value gap in this scenario. I would wait for it to be inverted, which gets inverted right here. I would set stop loss at the high and then take profit for 2R, just like that. In this case, you literally get juked by nothing, like by like 0.001 pips. But that's also why I have a variant to the strategy, which I've been heavily back testing, where your entry is actually on the retest of the mid zone, which in this case would have actually gotten your take profit pretty damn quickly. So that is another strategy which I've been employing that does quite well. Now, an example with this top level, we ended up having multiple candle closures above the liquidity level. Either with this situation, I'm not going to be taking any trades just because it's going to be way above, or I'm going to wait for a full inversion of all these gaps. So for the full inversion of all the gaps, over here we have 3 gaps created. I'm going to wait for a inversion, which is right here. Then I'm going to set my stop loss at the high and then take profit for 2R. And just like that, we hit 2R on this trade, which took a little bit longer, but still, it's only about 1 hour. And like I said, it takes you maybe 5 minutes looking at the charts. Or if you wanted to take the sniper entry, which in this case would have been right here with the first fair value gap created. Inversion happened right here with the stop loss right here. And of course, this gives you a ton of R if you wanted to hold this for longer. But for just a nice flat 2R, you would be only holding this for about 25 minutes. And if you had gone in on the retest of the fair value gap right at the mid zone, then let me just tell you one thing, you would have gotten 2R way faster. In this case, it did go sideways for a bit, but it would have been about 23 minutes, and down here, you would have gotten about 6R. So I hope you guys understand the power of these strategies. And yes, I've backtested hundreds of trades for all of these, and these perform extremely well over long periods of time. Actually, I have one of my students called Carmito inside of the Inner Circle, which this guy is getting over 15R per month with an incredibly high win rate on this model, slightly adapted based off the time frame, the actual pair that he's using, and a couple of other things. So there's always ways to optimize these things, and just because I'm showing you the way that I'm trading it today doesn't mean that I'll be trading it the same way maybe in a month or in a couple of months, depending on market conditions, and especially based off of all the trades which I've been taking. I'm going to be going over all of them in my journal to see what I can actually optimize. And by the way, this little strategy that I just showed you guys works on literally any market. If you guys are trading stocks, if you guys are trading crypto, no matter what market you guys are trading, no matter what time frame, you guys could be swing trading this. You guys could be doing this on Bitcoin, on the weekly, on altcoins, on Tesla, on gold, on Euro USD, on literally anything. In the end, it's just about gathering data. It's just a chart pattern, which once again, it's a few concepts put together. And all you have to do is just wait for these things to come together on whatever time frame, whatever pair, whatever way you're going to be going about it. Just make sure that before you bring it to the live markets, that you demo trade it, and before that, you backtest it. Now, I know what some of you are thinking. This sounds great, but I need more help implementing this. Look, I've put together a completely free course that goes even deeper into this strategy. Plus, if you want personalized guidance from me, you can book a call to see if I can help. Both links are in the description. But keep watching now because I'm about to show you the exact setup that's made me the most amount of money. If you want boring profits, this is the exact setup that I've taken 1,247 times or even more. It really is simple, isn't it? Now, before we go further, let me show you exactly when this strategy doesn't work, so you don't blow up your account. I would not recommend ever trading the last hour from 3 to 4 p.m. EST, especially on NASDAQ, of the New York session. I have backtested this quite thoroughly and gotten really bad results. Typically, you're not really hitting main liquidity zones. In this case, you did have London lows, which was taken over here, right around 1 hour before the market close. And this would have been a stop loss. I'm almost certain of it, just because overall we were in quite a downtrend and we only had a very, very small reaction. So look at this. In this case, you did have the first fair value gap right here, which was inverted here. If you wanted to wait for both of them to be inverted, to be all the way over here. Stop loss, and just like that, you barely got any profit straight to SL. So But you guys understand why it's important not to trade in the last hour. Some people call it power hour, but I call that bullshit. I'm not gonna lie. So yeah, typically you're gonna get the best volatility 1 hour before market open and then 1 hour after, especially on NQ. And outside of that, I don't really recommend Asia session. It doesn't do very well. Usually it's not the best. London, you will get very good results with this. So if you are in Europe or you are a maniac and you love to trade in the middle of the night, then go ahead and have fun with London because you're gonna get lots of really great setups with this. So yeah, I would say London and New York are quite good. Just do try to avoid the last hour, the last 2 hours more or less of New York session. And yeah, that's what I would say. Now, one thing I'll also say is if you are gonna trade Asia session, I've seen decent results on XAU USD with this strategy, trading it in Asia session. The only issue is I've noticed that technically the first Asia session of the week is on Sunday, right? So it's Sunday, Monday, Tuesday, Wednesday, Thursday. Because as soon as Friday comes around and we close the New York Stock Exchange, that's when the market's closed for the weekend. And so you only have 4 if you remove Sunday. Now you might be thinking, well, fuck that, I wanna have 5. I don't recommend it. Typically Sunday's not gonna be the best. In this case, you really didn't have a whole lot that happened anyways here. You had probably gotten stopped out if you used any internal liquidity zones. So I hope that helps you guys to avoid some losses. There's probably other things that I can mention. With the first strategy I showed you guys with the opening range breakout, we do use a couple of EMAs, but we are currently backtesting again to see if we can optimize them. So just be aware that I will probably change those, which is why I'm not gonna show you guys the exact EMAs, but you can probably figure them out relatively easily. And all it takes is a little bit of backtesting and you'll have it all set up for yourself. Another thing also important to mention is typically there's going to be news, not all the time, but there is going to be news quite often 1 hour before the market open. And I'm gonna go and try to see if I can find you guys an example of that where we did have some decent volatility. Because if you're trying to trade this strategy or any strategy at all, and you're just not aware of what happens 1 hour before market open, well, it's not gonna fare well sometimes for you. In this case, this is right here when the news hit. This is, in this case, 8:30 a.m. EST. We were kind of just chilling, ranging. Then we went down 67 points. Then we went up 100 points. And then we went right back down 100 points. This is really intense market conditions. The slippage, the spreads are not going to be ideal. So I don't recommend trading here. What I do recommend is trading after, once everything is stabilized, if you're actually finding a quality setup. If you do, then go for it because I've seen a lot of nice liquidity grabs going into continuation in New York. Now, here's the thing. Even with perfect conditions, 90% of you will still lose money because you can't follow 3 simple rules. Number 1, to start off with, only 1 trade per day. Yes, you can get resweeps and it can be annoying and you might be tempted to re-enter. Yes, maybe you'll see the opening range breakout on one side, you get stopped out, then it breaks out the other side and it goes for profits. But it's a lot better for you guys to remove revenge trading as a habit and just stick to 1 trade per day until you actually have a ton of data. And not only a ton of data, but also a ton of live trades proving that you can actually follow a disciplined system before you even start to think about introducing more trades. So in this case, you do get yourself a pretty good setup. You have this low taken out, and then you have this really, really nice move. And then even technically a market close, you do have this other setup, sweep, and then going down into these lows, taking these out, right? And these would all be great setups. And they are actually, they're quite great. The problem is you're gonna be seeing all of these, you're gonna be thinking, oh my God, I wanna take all these trades. Maybe over here, let's say you were looking at the markets, you didn't really see anything right around market open because we had this big ass move down. You saw this low and this high. We went up, we took out this high. Let's go ahead and go into market replay. Let's go to the 1 minute. You ended up seeing us create this high over here. We took out these highs. We started to reject. You either could have gone crazy and just decided, fuck it, I'm just gonna enter this, which I hope you didn't. But if you did wait for your condition to be met, which is us ideally being below the liquidity zone. So let me go ahead and just fix this. Us being below the liquidity zone, getting a rejection, inverting the fair value gap, you would have gotten a pretty good setup, right? Stop over here. Let's say take profit down here. The problem is you would have gotten stopped out. And this is what I mean by a resweep. In this case, we did have this high, right? So let me just move this, which we took out. We rejected it perfectly. We made this fair value gap. We inverted it right here, super clean. Stop loss here. And as you guys can see, this thing just ran and ran and ran for like 7.5 hours and half an hour. So of course, whenever you see this, you know that you lost a trade, you're being disciplined. You're like, what the fuck, man? I just missed out on the best trade of the day. You're gonna be very tempted to take another trade, right? And in this case, you could have potentially revenge traded on this way down, trying to chase it. You could have maybe tried to, play these lows over here as soon as we had any sort of green, which I hope, once again, you don't do that. Or of course, you could have been waiting for us to make our way down into this low over here, right? Which, like I said, looks like a good setup. Let's go ahead and just see what this thing ended up doing. The problem is, guys, whether or not you're actually following, proper discipline and a clear plan, if you are constantly changing your rules, if you're constantly going against your original plan, which should at first be to avoid any sort of revenge trading, any sort of like these kind of psychological habits of randomly entering trades, it's not good for you to go for too many trades in a day. In this case, as you guys can see, we did end up having a nice sweep, but we made such a small fair value gap over here, right? That maybe you'll be unsure what you want to do specifically in this kind of situation. Then of course you'll just be waiting for this thing to actually give you some sort of entry, nice and patient. This is what boring trading looks like. Of course you could just set an alert and you don't have to just stare at it like I said. This would be the inversion, this would be your stop, and then your take profit would be over here. And let me just go and let this play out. And in this case, that would have been a very nice take profit, all right? In this case, we also did have a retest of the level. So if you wanted to enter over here in the retest, then you would have gone 2R even sooner. Right, in this case, you would have gotten it on this entry and you would have gotten out 7 minutes later for 2R, unless you wanted to hold for longer. So yes, in this case, had you taken multiple trades, you would have gotten 1 loss and then 2 more wins and potentially even more if you ended up playing this, as I showed a little bit later. Like I said, guys, it's not about profits. It's not about any of that. It's about building the right habits. It's about building the right discipline. Because if you don't have the right discipline, you will in the end lose. Sure, maybe one day you could have gone a couple of trades and gotten maybe 5R out of it, which is amazing. But the next day you could just lose 5R by over trading, by taking a bunch of low quality setups. And trust me, I've back tested days where I had 4 fucking losses just because there was sweep, resweep, sweep, resweep a bunch of times. I've also back tested weeks where there was no trades at all. So the key to trading boring is to follow your plan. No matter what happens. Once again, make sure that it's all aligned with your data and that your data actually makes sense, or else you're just following a non-existent plan and pretending like you're disciplined. And that's the first rule. Like I said, the second rule also is not to trade 1 to roughly 2 hours before market close. Now, of course, if you have data to prove me wrong, that's great. But I would say in general, it's not exactly worth it, especially with New York session. I haven't exactly back tested London, but typically you do get the best entries right before or right after the open. The main reason why we do this also, just as a reminder, is based off hundreds of trades back tested and hundreds of trades in the live markets with these strategies and just with tons of different strategies, having observed these market conditions. And it's just to help you raise your win rate, lower your losers, your maximum losers in a row, etc., so that you're able to win more. And the other rule, which might be the most important, is if you miss the trade, don't try to chase it, all right? Sometimes you're gonna go take a shit. It is what it is, we're human. And you just happen to miss the entry and it's already running half R for you. Half R in your favor, you're a quarter of the way to your take profit, and you're maybe tempted to actually enter and to try to play it. The problem is, guys, it's not the right thing to do because that's not what you did in your back test. You can, of course, take the entry, but the problem is you'll have to remember that you're gonna be taking your entry, stop loss, and take profit the same, except your entry is gonna be, in this case, lower or higher, which means your total R is not going to be as good as it could be, okay? So let me go ahead and just show you guys this example with the trade that I showed you guys earlier for the resweep, just so that you guys can visualize this very clearly. Once again, we have this FVGO over here, clear swing failure above the liquidity level. You would be shorting typically right here. If you were just 1, 2, 3 minutes late, this would be your entry, this would be your stop loss, and your original level, let me go ahead and show you guys this. The original 2R would have already been hit all the way over here. Meanwhile, over here, you'll only be up 0.6R, which makes a huge difference, guys. Massive, massive difference. You would need to take this late entry, big ass stop loss with the same risk you would normally do, not with higher risk, and the same take profit to make significantly less, or completely just not take the trade. Now, you'll be thinking, but Seb, in this case, it ran and I could have hit 2R. Of course, but you're not following your plan anymore. You're doing something completely different, right? You can, of course, apply discretion and say, well, look, we have this liquidity over here. I think we'll probably hit that. Sure. But right now, you are starting off with your strategy. You're making sure that you're actually following it and being disciplined. These rules are for you to be disciplined, right? And for you to extract as much profit while minimizing the amount of losses. Even if you miss a bunch of trades, right? Whether you're missing them because you were on the toilet or doing something else, or because, I don't know, whatever other reason, maybe it was a little bit too late in the market session, maybe there was a resweep or something and you didn't take the re-entry. Point is, guys, you're still gonna be profitable, right? Relax, there's always more setups. Let's go over literally today, the day that I'm filming this, what kind of trade setups you actually had with this strategy. So first things first, you mark out your liquidity zones. We're right at the market open. So you can go ahead and add these and also this, as we have relatively equal lows, as you guys can see right here. And let me go ahead and see if there's anything else. We also have a low down here. Now what we're gonna be doing is just skipping ahead. I like to stay on the 5 minute and just wait for some sort of decent move going into a liquidity zone. I don't know why, but TradingView is pretty much always tripping on me these days. All right, so in this case, we don't quite hit this high. Then we make our way lower, right? We take out this low, but we don't do anything at all, so you wouldn't do anything. Also over here, we did take out this low, but there was no fair value gap made, and so there's no trade. The best thing you can do, guys, is just avoid trades, because it's just gonna make your life a lot easier and you're gonna be able to avoid tons of losses. Then over here, we are taking out this low, we're coming close to this one. Let's see if we have any sort of reaction at all. So now we're taking out these lows, which are pretty key in my opinion, because we have relatively equal lows. So this is probably gonna be the best setup of the day. We're also coming down into discount, boom, boom, and like that. You guys can see we're all the way down to the 888. We have fair value gap right here that's been formed, rejected. We're still above the sweep level and holding it and inverted. Now, like I said earlier, based off your back test and how you trade it, you'd either wait for all these to invert, but in this case, it's such a large leg that you would just be entering based off the first fair value gap. A couple different reasons for that. For one, because the fair value gap is very close to liquidity level, because we have a nice swing rejection from there, because we already had a good amount of volatility coming in. And with this, you'd be able to get 2R with a not so far away level. Also, if you were to get a retest and a break out of it, you'd be able to get even more confirmation. So there's a couple different ways you can go about it, but if you were to get market entry, just like that, boom, and boom, you'd be able to get 2R moving up into this level, which if I grab a fib, I don't usually do this too much, I just visualize it myself. It's right around the golden pocket. So quite key. You can also visualize this by actually like pretending like you're actually entering this. So, okay, there you go, buy, then you put in the SL, and then you put in the TP, and then you pretty much just let this play out. So in this case, as you can see, we didn't actually have a retest. Oh, look at that, we barely got juked, let's see. So we barely even had any sort of retest. Now, we did have this inversion all the way over here, right? But we never actually came back to any of these fair value gaps. So we've totally missed the trade. Maybe if this thing keeps running higher, you would have gotten this play, but then there's other fair value gaps here, so you've just never taken a trade. Main reason why we're using this. Then the other thing is, if you were to look at the second fair value gap, invert and then retest. So if you wanted to just look at these, you would have still gotten a pretty good trade based off the inversion or based off the retest. So this would have been 2R. And on the amount of funding that I have, well, that's basically 5 figures. So it doesn't have to be complicated to trade these kinds of setups. And whenever it comes down to opening range breakout, I already showed you guys an example earlier. There's less trades that come out with that one because we have a whole bunch of different conditions we're looking at just so that we can avoid most losers. Now guys, let's just talk about my morning routine a little bit, all right? On some put my face in ice water type shit. Just kidding. What I'm gonna go and show you guys is honestly very simple. So simple. Wake up, all right, and this could be a general guideline for you guys depending on how you trade. If you're gonna be trading right around the New York Open, or you know there's a good amount of volatility around that and you wanna be capturing, wake up at least 30 minutes before market open, right? 45 minutes is ideal, so you have a bit of time to do whatever you need to do, like put your face in ice water. And then you just want to stretch a little bit, have a nice little bit of tea, go for a nice little walk if you can, open up your charts, add in all of your liquidity levels like what we just did, set all of your alerts. In this case, this is what it would look like. You know, let's say you were to do down here, I would do option A, the price, crossing horizontal ray, only once, open an alert. I could add in a message if I want, make sure my notifications are all set up accurately, click create, and that's literally it. Once my phone goes ding, it's one of the only notifications, TradingView that is, that I actually allow to make a proper sound and full vibration, or else I get too many notifications. Once I hear that, once I feel that, I know it's time for me to go into my charts, whether it's on my phone or my laptop. I look, whether that's 5 minutes after I set the alert or 5 hours, I look, I wait for us to actually reject from the liquidity level. And then once we actually reject from the liquidity level, I look for a fair value gap to be formed. And then at that point, it's as simple as just entering. That's really it. It doesn't have to be more complicated than that. I don't go for a 5-kilometer run. I don't do all this crazy shit. I don't go through scanners and all this stuff. I only use one pair. It's nice and simple. And the simpler that you set your things up, the better. Let me also talk about execution for fun real quick. Trading panel, connect whatever broker you have. I'll just go to paper trading because it'll just be simpler. Then you pretty much add in your tool. Let's say you wanted to short right here. Don't just do that. Just complete random example. set it all up accurately, create a limit order. If you want to get in market, click on market, risk percentage balance, make sure that that's accurate, and literally just get in or use your limit order, whatever you prefer. That's literally it. Now, of course, you might be thinking, but Seb, the broker, the prop firm, the thing that I'm using, it doesn't allow me to do that. Well, there's something called the trade copier, right? This is one thing that everybody in my inner circle has set up, whether you're using FTMO, whether you're using Blue Guardian, whether you're using fucking futures prop firms, it literally doesn't matter. You're going to be utilizing your prop firm, which could be on MetaTrader, on TradeLocker, on CTrader, on MatchTrader, doesn't matter. Doesn't matter the platform. You have that set up as a slave, shout out to the 1800s, just kidding, onto a trade copier like Traders Connect or MetaCopier, which are the main platforms which we use. And as the master account, you just find yourself a brokerage, which actually allows you to connect straight to TradingView, which in this case, the best that I've seen over multiple years and a shit ton of research, I'm gonna give it to you guys for free, is IC Markets. If it says you can't make an account because your location, use a VPN, it's very simple. Make a free account, make a demo account, choose CTrader, make it a flat like 100K account. That's literally it. Make it the master and the trade copier, make the slave your prop firm account. It's really that easy, guys. It's really that easy. You can have your risk automatically set for you. You can also have an auto lockout time, so you can't place trades past a certain time. You can have it close all your positions once a certain loss or profit is made for the day or overall. Lots of amazing things that can be done, and honestly, it'll cost you like 20 bucks a month for you to have a way better setup where you do all of your analysis already and a whole bunch of extra things. So yeah, highly recommend it. Also, really quickly cover the whole topic of I only have $500, only have $1,000, only have X amount of money. In the end, all you need to do is just do the math, right? Let's say you have a $500, to trade with. Let's just say that. And let's say you've back tested quite heavily over the last month. You've gotten your data. You can do 10 hours per month with, let's say, 60% win rate, with max 4 losers in a row, and with, let's say, 5 trades per week. That's gonna, 10 hours per month is gonna be a little bit low for 5 trades per week, but you guys get the point. So you'd basically be doing 20 trades a month, making 10 hours per month. Whether you have $500 or $50,000, it's gonna be the same thing. You just need to figure out what your goal is. Once again, create your goal, reverse engineer it, and then you'll be able to get there. It's really as easy as that. So for you to do this, you just need to actually think for a second, what do I want to do? Do I want to go with prop firms? Do I want to go with a personal account? If you're going to go with a personal account, then here's how you're going to be doing it, okay? If you're going to try to flip it, let's say you want to flip $500 into $1,000, right? So that you can start to gather more capital and 2x it. Some of you might think, oh, but that's too little. I want to get 50,000. Go fuck yourself. 2xing your account is very good, okay? And once you actually continue to do that, you will be able to get a bigger account. Obviously, everyone wants to get 50,000, 500,000 and more. I'll get into that in a moment. First, go for the low-hanging fruit. 2xing is not low-hanging fruit in my opinion, but anyways, it is what it is. So to do that, you need to figure out, okay, cool. For me to do that, let's say in a month, how would I do that? Well, for me to be making 10 hours per month with a maximum 4 losers in a row, let me figure out how much I can risk. Well, if you would blow your account with 4 losers in a row, then you could just account for 5 losers in a row. Well, account for the 4 losers in a row max by risking 20% of your account. That way, with 4 losers in a row, you would only lose 80%, only 80%. Once again, you're trying to flip your account. And if you were to, lose 5 in a row, then that's it. But once again, your data should prove that it's not going to happen as long as you don't prove to make any mistakes. You could, of course, just do 10% risk per trade. It's going to be a lot safer. You could do even lower than that, but you're trying to grow your account very fast. So if you wanted to do that, then you'd basically be making 10 times your risk, which is 10 times 20%, aka 200%. So you would actually grow your account quite fast. And if you're compounding it, then you'd be able to turn $500 into a lot more than 1,000. So in this case, you don't even need to risk that much. Once again, we're just doing the math. You can risk 10% per trade with 10R equals 2x. So $500 into 1,000 in a month with much lower risk of losing your 500. And that's it. That's literally the math. And if you just keep repeating this month after month, you'll be able to grow your account. That's it. And 10 hours per month with, the numbers that I just gave you, which are all kind of random. I don't know if they, put themselves together very well, but you guys see the point. You will actually be able to get quite good results, okay? So that's all that really matters, guys. If you're gonna be using prop firms, I'm gonna go ahead and just remove this really quickly. You're gonna be buying 2x challenges worth 250. You're going to be aiming to pass them in a few trades or below them. So in this case, you do first challenge. Let's say you blow it. Second challenge, pass it and get a, let's say 2% payout. Let's say you're getting a 25K funded, that you would make $500 profit already, right? Which means in this case, you've already spent 500, right? You lost 250 from the first account, so you're basically break even. But now the thing is, you have a $25,000 funded account, which you can make unlimited amount of money on, and you still have your $500 that you originally put into the accounts. So which is better so far? The one where you have 25K to trade with plus $500, that you started off with, or the one where you're like kind of struggling to grow your account and anything can happen to the broker. I'm sure you guys get the point. Then you just keep scaling this up. So, in this case, you would just take the 500, buy a bigger account. In this case, let's say a 100K account, make 3% equals 3K profit. You've just flipped 500 into 3K, and you've got 125K of funding. Let's say you make 10% per month on 125K. That's going to be 12.5K in your, let's say, second month. It's leagues different. But Seb, what happens if I blow the account? What happens if I get my payout denied? You go with different prop firms on a trade copier or by trading them a little bit differently so that you spread your risk. That's why I showed you guys just 2 or 3% profits. And once again, if you were to blow one account, you'll still have the previous account. That's why you start with small accounts. Then if you lose a couple, it's fine because you'll be able to just buy another one. Once you pass and get a payout, you buy a bigger account. If you lose that, you still have your old one. All right, it's a great system. All right, and here's the brutal truth, guys. I just gave you a strategy, multiple actually, that made me over $2 million in the last couple of years, but most of you will still fail with it, like 95% of you most likely. It's not because the strategy doesn't work, it's because of what I'm about to tell you. Psychology. And yes, psychology, whatever. Guys, think about it for a second. If you were to actually put in the hours, okay, you properly study a strategy, you have all the basics locked down, you are actually backtesting a strategy, you're getting good results, you demo trade, you live trade. If you go through all of that, you will succeed. But there's little traps, little landmines along the whole way. Along the way, whenever you're starting, in terms of learning the basics, you're gonna get bombarded by all sorts of strategies, all sorts of terminology, all sorts of markets, all sorts of scams. There's a million traps at the starting stage because you don't know what the fuck you're doing, so all of it seems like good information. Then once you're starting to learn a strategy, you could learn 10 fucking different strategies from all these different YouTube videos and get totally confused and lose the plot for years, like most traders do. Then the next step of actually back testing and demo trading, you'll probably just not do it. If you do it, you'll probably get, you'll probably not do it properly. You'll probably not understand how to actually back test properly, and you'll give up after a few hours of just getting a couple losses and not understanding what you're doing. Right? Then demo trading, you could demo trade for months. Some people do demo trade for months. I have no fucking clue why they do that. They don't know what the fuck they're doing. Then of course, once you're live trading, all these other mistakes can come in terms of revenge trading and wanting to make more profits faster. And oh my God, I spent a couple of months trying to learn all this. I want to make profits. You guys get the point. Psychology is what fucks you, like really badly. And one reason why, is what I mentioned earlier and when I was talking about social media, guys. Social media will fuck you royally in the fucking ass, guys, like big time. It's not good. Trust me, it's not good. But Seb, I'm watching your video on social media. I'm on YouTube and Instagram. It's fine, dude. Look, you're still in the phase of looking for something. I'm not gonna tell you to just stop watching all content and uninstall the apps. My point is, you're spending too much time on these apps and consuming information versus applying the information you learned. If you spend an hour a day watching YouTube shit, but then you spend 3 hours back testing and actually applying it, you're good. If you spend 3 hours watching YouTube shit and 30 minutes like taking trades and not really journaling, that's the problem. When it comes down to psychology, guys, I've lost a lot of money, a lot of money to this kind of bullshit. And after losing over $10,000 to brain-induced over trading, I developed a system that makes it practically impossible to break my rules, even when every cell in my body wants more action. I went over what I like to do in the morning, like before I actually start the trade. And that's more specifically with the trade. But like I said, I like to take a bit of time to walk, to have my tea. Also, maybe a little 5-minute meditation, some breath work really help you to ground and to just be patient and to feel ready for the markets. Because if you just woke up 2 minutes ago, alarm rang, you go straight into the charts, you try to draw everything, all of your alerts trigger, you're trying to place your trades, make mistakes, etc., you will most likely just set yourself up to fail. The other important thing too is making sure that you review the trades from the day before, you journal them properly, etc. If you haven't done that the day before, definitely make sure you do that the following day before you take more trades, or else you'll just never do it. And make sure that you actually review them also. Even if you journal them the day before, make sure that you actually review them before your session so that you can see what yesterday's price action was, what the setups were. You can even look over the whole week, as that will help you get better insights into your trading day. And also remember, guys, I mean, once your trading session's over, that could be at 2 p.m. EST, 2 hours before the market closes, you should have your software auto-close all your positions. It's all done. That's it. GG's. You can't place any more trades. Risk is locked. You put your phone in the fucking drawer, turn out those notifications, and you just go live your life. Trading is not meant to take over your life. It's meant to give you your life back. And of course, when I'm done trading, I make sure to actually take some time for myself, go to the gym, go for some walks, play some tennis, get a massage. I mean, just live your life, guys. Have some good, healthy meals and shut down the markets. You don't need to look at them all the time. Congratulations, you now have everything. The tools, the strategies, the psychology, but the information without action is pointless. So here's your exact 30-day plan to making boring profits. In 4 weeks, you guys need to make sure that you're very, very locked in. All right, you put in the hours. I'm not saying 10 hours a day, just a few hours a day is gonna be fine. Week 1, you need to make sure that your basics are locked down. All right, make sure to go through the free course. Make sure that you just ChatGPT whatever you're unsure of. And if you have any questions, just hit me up in my DMs and I'll gladly help you. That's week 1. You wanna make sure that your basics are locked down, that you understand how to use TradingView, and that you start to actually look for the right strategy. If you can find the right strategy for you, it could be one of them which I just talked about today, then I want you to start back testing, right? If you can all do this within week 1, you're gonna get really good results. Week 2, I need you to just do back testing. Focus on back testing. And if you do enough back testing and you get decent results, you can actually start to demo trade that week. Just start the paper trade, take a couple of trades, see if it's actually aligning with your back test. Just keep back testing, place the trades throughout the day, and it's going to help you a lot to make sure that you're actually able to execute this in real time, that the results are similar. By week 3, this is when it's actually really important for you to be serious about this and not just go crazy with the exciting trades. This is when you're going to be starting your first kind of paper trade account. So you're going to be finding the right prop firm. It could be FTMO, it could be any account, really, it doesn't matter. It could be E8 Markets, it could be Top Step, whatever. You find the prop firm that's best for you and your strategy and everything else. Right? If you want recommendations, like I said, my DMs are open, or you can comment down below and people are gonna be able to help you. You want to find yourself a prop firm that works for you, look at all the rules, find the exact challenge that you're gonna be buying the following week, look at all the numbers like the profit goal, maximum daily loss, maximum overall loss. What I need you to do is opening up a paper trading account and TradingView and simulate it as if you're actually taking the challenge with your account. If your FX replay backtesting is done, then you're good, but you can also continue to backtest if you'd like. It is going to be good for you to get as many trades as possible, all right? So you have gone the basics, you've gone your strategy, you've backtested, you start to demo trade, and now you're going through the challenge phase that's basically being simulated so you don't just blow money for no reason. Then if everything goes well and you're able to get decent results, once again with high risks that you can either pass or fail quickly, the following week is where you're going to be actually buying that challenge and looking to pass it. If all goes well in a month, you're gonna have gotten the basics down, you're gonna have your strategy, you're gonna have your data, you're gonna have proof that you can actually take the trades in live markets, prove that you can pass a challenge, and you're going to be funded. All you have to do the next month is basically continue to trade, get payouts, and scale up like we talked about earlier. It's that easy, guys. And I know you're skeptical. Most people are. It's too simple, it can't work, or what's the catch? That's exactly what these traders thought before they sent me these messages. This is my free Discord's wins channel. All right, you guys can see this is all public. I also throw these onto Instagram. We take so many incredible trades every single day. In this case, Dave got a re-entry onto XLM and is getting absolutely massive profits. I know this is actually on Doge. He's getting 2.5 on his account, and he's up well over $5,000 on multiple funded accounts with just this one trade. Then over here, we have one of our analysts, which literally is in like 10 different trades, all printing massively. We also had another one of our analysts hit 10R on Bitcoin. These are all trades that our members are actually taking. Dave, for example, is up $6,000 on his E8 account. Then over here, 3% away from passing a 100K breakout account. And there's many other accounts as well that he's up on. Up 3R on the way down with this short right here and 4.5R on the long. These are all with these strategies that I just gave you guys. W merge, by the way. And we have plenty of other members as well cooking. Most of them just like to stay shy. For example, over here we have Gabari, which hit a very nice scalp over here with one of these different strategies, which I didn't cover today because it's based off London. Then we also had Sea-Dog over here, which is up over 5 figures in payouts over the last couple of months from him employing his own strategy that he built with Strategy Builder, which is something that we have to help you build out your strategy. Then we also have Pathos, which every single day is printing almost thousands of dollars. I mean, 700, 800, some days even more. And this is on different accounts that all add up because he's loving his futures, because he's a futures trader. And it goes on, 669% over here. The live trading also that we did over here was insane. We got over 9R in just an hour. Over here, Gabari was cooking with this long that went to full TP. Another one over here. This was with the Orb strategy that I showed you guys, 1000% here on XLM. Dave up well over 10K on just this one trade on his personal accounts. And it just keeps going. I mean, over here, Chaser got his 200K E8 account passed just from our SCT strategies. And over here, Magna God with $4,000 profit in just one trade, and many others over here. We have this person up 4K. Then we also have Pathos getting another 50K funding. It just keeps going. We have Kermito as well, getting 5R on this so long. And the common theme with all these guys is that in the end, they're all just very, very simple trades. Very simple setups. There's nothing special about it. It's just entry, stop loss, take profit. This setup over here Gabari gave was not exciting. It was just place the levels, place the limits, and then wait. There's nothing exciting about it, but it definitely printed for him. And also, most of these people were struggling for years, and within just 1 to 2 months, they got incredible results like Magna God, which, I mean, I'm sure you guys have heard of. This guy came to me, said, fuck it, dude, I just spent 20 grand on my honeymoon. I need to make my money back fast. And he hit over here 5.3R just on one trade with a strategy that we're helping him employ. And if I just keep scrolling, you're going to be able to see a ton of wins. In this case, he made 5K in just one trade. I mean, I don't know how much this guy's up. It's incredible though. Let me clarify once again though. Being boring is, or at least trading in a way that's boring, is not easy, all right? You may think this looks easy, but it's not easy when you actually apply it. And before you go chase the next exciting strategy, let me leave you with one question that'll determine whether you make it as a trader. Do I want to be entertained, or do I want to be wealthy? Do I want to keep doing the same shit I've been doing and not getting the results? Or do I want to actually put in a bit of effort, it's nothing too crazy, and be able to do whatever I want, whenever I want, literally fucking anytime, anywhere? That's literally it. That's the question. And it's up to you. Keep scrolling, keep going through different YouTube videos, or actually lock in and put more time into your trading than watching other people's trading. Boring pays the bills, excitement pays the brokers. Just remember that. And if you're still not sure what you want to do, just try boring for 30 days with the little plan I gave you, then decide. In a world of trading, entertainers, just choose to be a boring millionaire. It's a lot funner. If you're ready to master the boring way to wealth, hit subscribe and the bell, because I drop new trading videos every single week that actually work. And if you want to perfect your entries and exits, watch this video next. How to enter and exit trades like a pro. I break down the exact moment to pull the trigger, when to take profits, and how to never let a winner turn into a loser. It's the perfect companion for what you just learned.